Welcome to Heartofeconomy. Today, a Senate hearing in Washington shook not only politics, but also the trillion-dollar pharmaceutical industry. Secretary of Health Robert F. Kennedy Jr. directly challenged Pfizer, Moderna, and other pharma giants with remarks that rattled the establishment. But this isn't just about political drama. What's unfolding here could reshape Wall Street's outlook, redirect global capital flows, and redefine investor strategies. Let's uncover the financial realities behind Kennedy's explosive testimony. Since taking office, Kennedy has been shaking the very pillars of the system. He fired the newly appointed CDC director, Susan Monteres, and dismissed 17 members of the CDC's vaccine advisory panel. Washington was stunned. But here is the deeper issue. Kennedy argues that the CDC and major medical organizations cannot act independently because they are founded by pharmaceutical companies. This isn't just a political job, it's a direct challenge to a massive economic network. Remember, the US healthcare system spends hundreds of millions of dollars every year on drugs and vaccines. Every decision here has an immediate impact on corporate balance sheets. Kennedy's actions threaten that entire revenue stream. My take, Kennedy is trying to rewrite the rules of the game, but in doing so, he is confronting not only politicians but also some of the most powerful players on Wall Street. And that sets the stage for growing financial uncertainty. Now, let's turn to the market side. Kennedy recently canceled $500 million in federal funding earmarked for mRNA vaccine development for Pfizer and Moderna. That's a direct hit because government support is the lifeblood of new drug projects. So, what happens when the funding dries up? Research slows, new products are delayed, and long-term growth stories weaken. It's not just today's profits at risk, it's tomorrow's earnings too. In fact, recent volatility in Pfizer and Moderna shares shows that investors are already pricing in these risks. Here's my view. If Kennedy stays the course, volatility in the healthcare stocks will surge. That means bigger opportunities for traders, but also sharper losses for the unprepared. There is another angle. These companies aren't limited to the US. They'll try to offset lost revenue in Europe, Asia, and Latin America. But global expansion is costly, competition is fierce, and profit margins are thinner. Investors face a far more complicated landscape than before. The Senate hearing also exposed another dimension, political risk. When Kennedy accused Senator Elizabeth Warren of taking $855,000 from pharmaceutical companies, he wasn't just sparing. He was spotlighting Washington's deep ties to the industry. In the public eye, Kennedy positions himself as a long fighter against Big Pharma. But for investors, this is dangerous. Market confidence rests on trust. If policymakers are perceived as compromised, investors start questioning the entire framework. And let's not forget, the US healthcare sector is more than just drug makers. It includes insurers, hospitals, and medical device giants, all interconnected with Big Pharma. That means every political shock in Washington creates a chain reaction across the entire ecosystem. My perspective, investors can no longer just analyze balance sheets. They must watch Senate hearings because political battles are now shaping financial outcomes. Kennedy tried to calm fears by saying he won't change measles vaccine recommendations, but his overall approach keeps markets on edge. Looking ahead, we can expect three major outcomes. First, volatility in healthcare stocks is here to stay. That creates short-term trading opportunities, but raises risk for long-term holders. Second, capital will rotate into other sectors. As healthcare loses some investor appeal, money will likely flow into technology, energy, and defense, areas seen as safer during political storms. Third, Pressure on the US healthcare budget will increase. If federal funding shrinks, pharma companies will pass costs on the consumers. That means higher insurance premiums, higher medical bills, and ultimately weaker consumers panic. And when consumers panic slows, the entire economy feels it. My view, if Canada truly breaks Big Pharma's grip, the ripple effects will go far beyond the health sector. Budget dynamics, global direct markets, and investor strategies could all be transformed. These shifts won't stop at America's borders. The US is the beating heart of the global pharmaceutical industry, and every move here sends shockwaves abroad. Take Europe. During the pandemic, Pfizer and Moderna sold billions of doses across the EU. If US funding dries up and research slows, Europe's supply chain could face disruptions, dragging down European pharma stocks as well. Now look at Asia. China and India are repeatedly expanding their biotech sectors. If US pressure mounts, Big Pharma may shift more investment eastward. That could boost Indian markets while weakening US dominance. And in developing nations, the effect could be fierce price wars. Pharma giants might aggressively expand into Africa and Latin America to compensate for US losses, but that means thinner margins, tougher competition, and unstable earnings. My take, Canada's policies won't just shape Wall Street, so they could shift the balance of global healthcare finance from London to Tokyo, from Frankfurt to Mumbai. Investors will need to watch US politics more closely than ever before. Today's Senate showdown showed us something crystal clear. Healthcare policy isn't just about doctors and patients. It sits at the very heart of global finance. Kennedy's defiance is squeezing Big Pharma, but the squeeze could unleash massive waves across Wall Street and beyond. So what do you think? Can Kennedy really weaken the pharmaceutical giants, or will capital, as always, find a way to win? Share your thoughts in the comments. And don't forget to subscribe to Heart of Economy, because here we don't just cover the headlines, we reveal the economic truths behind them. And remember, markets move not just on numbers, but on trust, politics, and power. What happens in Washington today can move trillions on Wall Street tomorrow. That's why at Heart of Economy we go beyond the headlines, to give you the insights that investors, traders, and everyday viewers need. So if you found this valuable, hit the like button and share this video. See you in the next time.